Hi, guys. I've got a news article for everyone, and it's kind of summing up the day. And I know we've all been hearing about GameStop and Wall Street bets, but I spoke with my good buddy Patrick Ceresna with Macro Voices and Big Picture Trading, and he's an options expert. He says what we're seeing right now is going to be historic. And just like oil going to negative $40 a barrel, or the housing boom in 2006, 2007. I want to make sure that we understand the impact that this has and what it's telling us about the overall market. So let's go to this news story. And I'm going to assume that you guys can see this because my face thing isn't popping up here, but we'll just assume. Whenever I use this Apple News, it just does not want to work with my software. So anyway, GameStop stock plunges. Now, keep in mind, this morning when I was doing my video, because tonight's whiteboard video I did on this market hysteria and how the options work. So if you guys are kind of wondering, like, how does a short squeeze work, or what happens with the market makers when the Wall Street bet guys buy call options? Why do the market makers have to hedge? Why does that drive the stock up higher? How does it create this feedback loop that just makes the price go parabolic? If you're kind of wondering how it all works, definitely check out my video this evening because I walk you through it step by step. So this morning when I was doing the video, my point was GameStop got up to like $496 a share in maybe the first hour of trading. And then when I was doing my video, it tanked down to what I thought was it tanked down to 300, but apparently it went down even more than that. So back to the title, GameStop. I keep calling it GameStop. GameStop stock plunges, but overall stock market delivers gain after Wednesday losses. Okay, GameStop and AMC, another stock that was targeted by the Reddit forum Wall Street Bets, plunged Thursday morning in the latest twist in a roller coaster ride set off by the amateur investors who fueled basically the crowdsourcing of these 3 million people trying to create a short squeeze, or not trying, definitely achieving it. Their shares were down 44 and 57% as of basically midday. This doesn't really tell the story, though. It says GameStop was changing hands in the vicinity of 196, probably when this was written. I should pull up a chart here real quick, see where it is now. AMC traded about 8. But I want to point out that when I was looking at GameStop this morning, it was trading at 496. And so it went from it started the day at like 350, goes up to 500, and then down to 200, looks like within the matter of the first 3 hours of the trading day. So again, this type of volatility is just something we may never see again. And if you're wondering, you don't see this at the beginning stages of a bull market. You don't see this at a market bottom. FYI, you see this when the market is topping. There is emotion, there's hysteria, there's panic, there's mania, there's everything in this whirlwind of just very interesting psychology, I think is the best way. It's just, man, there are a lot of cross currents at play right here, but the key component is this is just pure emotion that we're seeing. So to start off 2021, GameStop closed at $17.25, and I went back to a chart in 2020. It was down at $2.80 a share. Today, trading at $4.96. Through early Thursday, GameStop shares had surged more than 1,000% this year, compared with just a 1% rise in the S&P, as if there's a fundamental reason for GameStop going up that much. AMC kind of tagging along. That's their next target at 230 or 230%. Then it talks about Apple crushing profits, but the stock down 2%. Of course, yeah. And isn't this just par for the course? Apple fell 2% after it posted a record quarterly profit, but GameStop, who's an inch away from bankruptcy and bleeding, hemorrhaging money, their share price was up 1,500% today. That just tells the whole story right there, doesn't it? Now they go into what I've been talking about, stimmies, and more stimmies. President Joe Biden proposed a 1.9 trillion cerveza sickness relief package. Listen to this. But worries are growing. The plan might also be scaled back. You see, so we're getting to the point now where we are only looking at the asset side of the balance sheet, or we're only looking at the profit side of the P&L. There is no consequence to what we're doing. You see, the market is saying, oh my gosh, there's worries. There's worries it could be scaled back. Should we be worrying that it's being scaled back, or should we be worrying that they're spending 1.9 trillion in stimulus in the first place after they've already spent 5 trillion in the past 12 months? I mean, what about worrying about the liabilities? We're worrying that we're not running up the credit card fast enough and completely ignoring the fact that at some point in time, the fiddler must be paid. And I'm not saying that we have to pay down the debt or anything like that, but whether it's through inflation or a distortion of the economy, there is no free lunch. Let's remember that. Yeah, that was the main point I wanted to make with this article. Big update, just historic things, literally unprecedented that we're seeing in the market. And the media spin that we're getting is stimulus good. But see, if that's the case, if 1.9 is great, then why isn't 4 or 5 or 10 or 20 trillion even better? Why not just do 20 trillion in stimulus in the next 3 days? Like, why not? But would the market worry about that? So if it's worried that the 1.9 is being scaled back, would it worry if we did 20 trillion? You see, the message is completely convoluted, and we're being brainwashed to believe stimulus good, no stimulus bad.